those who know me, uncharacteristic of me, I've prepared a presentation. Um, so as usual, at the end, we'll just open up to questions. And if there's not a ton of questions related to off market, I'm also happy to answer any questions anyone has about their deals, just respecting sort of the hour limit. Okay, so I'm going to be talking about sort of my direct experience with off market since I've been doing it for a while now. First time we did it was pure email when we were buying digital assets, and sort of a roll up we had called Wired Investors. And again, if people want to do digital, I can answer all that stuff, but it's been a bit, obviously, since I did it. Second time was through a call center that we set up actually locally in Toronto. I was taking calls, my wife took calls, my sister took calls. This was very selective. We were looking specifically for slightly larger deals for Snowball, which is another roll up we had of still running of plumbing and HVAC companies. We closed on probably the best deal we've ever bought in terms of just the quality of the actual asset. And then the next two are part of Acquira. So the first time we did it, we set up a call center in the Philippines. And then we did basically a pay-per-click funnel, mainly AdWords. We tried Facebook, didn't have a ton of success, usually on sort of business valuation terms. My experience, we're still learning and refining. I would say when we set up the Philippines call center, we were really strong at the top of the funnel. At that time, not as strong at the bottom of the funnel, just because we hadn't really set up the process behind it, which we'll get at. And then when we did the pay-per-click funnel and had kind of shut down the call center for a period of time, we were kind of stronger on the bottom of the funnel. And now we've relaunched the call center, and I feel like we've kind of got to this nice balance there. If you choose to do this, this is all going to be about how to do it, expectations, just budget, that there's going to be a bunch of learning. So why should you do off market? This may seem obvious to some people, but I'll go through it anyway. If your thesis is very narrow, usually that means your geography is very narrow. You want to be within a couple hours of where you live, and where you live isn't a huge city. Sometimes, however, people are, only want a plumbing company that has 2 million SCE. You're not going to likely find that on market. And you also have to be aware of sort of what on market looks like in the states you're looking to buy in. Just obviously Florida has, almost 3 times more listings than any other state. If you're more risk averse and you want to target deal types that have higher sort of friendly terms, so maybe there's a higher seller financing or earnout component, then off market's the way to go. I'm just going to mention this, though so people who don't have a ton of equity for a down payment and don't want to raise money elsewhere, you'll see off market being promoted a lot as like buy a business with $0 down. That is the only way you can do it if you don't want to raise money. It's not what I recommend, but it can be done. And the last one, which a lot of people don't consider, is if you really want to build a relationship with the seller before you even really consider buying a business. Just like Alex was saying, he seems to have a great relationship with the seller. That's harder to do when you have a broker around, because brokers will often, limit your interaction with sellers, especially pre-LOI. So just going back into one of these items, into the sort of higher seller financing deals. So with off market, you can still do the same and find the same types of deals that I would call like our sweet spot, which is this, ideally growing 750K plus STE business at around, a 3.5x multiple. That being said, I do think off market opens up alternative deal structures, which can be quite interesting. And typically that's either smaller deals or deal where there's a little bit more hair, right? So maybe there's more customer concentration than you typically look at. Maybe the deal's a little younger than you typically look at. The reason this is possible is because a lot of these deals you can do very high seller financing, so 50% or more. You can bring forgiveness into the seller financing. I would typically say that if you're going to do that, you should probably add something seller favored in return, like giving an extra earnout if the business does really well for a year or two. And we can later on, or if we go into the questions, we can go into an example of what that might look like. But I have a brief example here, which is a lot of people might be looking at they're looking at that 750 to a million SCE and really thinking about a post-debt take-home of about half that amount at a 3x multiple. So let's call that 375 to 500, or around 400K a year with no growth. That is possible to do with smaller deals, and it is possible to do and to remove some of the risk of the smaller deals by simply having the equivalent of an earnout where the seller finance is deferred if a business doesn't hit a certain earnings target or revenue target or gross profit target, and that if it's deferred after X years, it's forgiven. Like I said, in order to kind of make that reasonable for the seller, I think you should balance it by saying, hey, if we do really well, we're going to have an additional note. And by the way, if any of this is confusing, feel free to just raise your hand and Doug will point it out and ask a question. In terms of challenges in off market, so brokers do work, and it's quite a bit of work. Obviously, there's the basics of collecting information needed to create a SIM and a data room. That's the easiest of what they're doing. Setting realistic expectations for valuation is also a lot of work and takes some skill. And there's an element of therapy that happens from start to finish because someone is basically selling their baby. And if there's no broker involved, there's often nobody else involved doing it, and it needs to happen. I would also say that post LOI has a slightly higher chance of losing the deal versus on market, just because the sellers may not be as ready to sell. That being said, you may find that the off-market deals that are ready to sell, they may even be willing to move in quicker if it was a deal that had been listed in the past but no longer has a broker.
Hey Hayden, real quick point of contact. I just realized we had a question pop up in the chat room that I missed. Question was your reference to top of the funnel and bottom of the funnel. Could you just quickly elaborate on what that means?
Yeah. So actually, I can elaborate with this little process diagram. So I just separated this for like how we fulfill off market. So the funnel is basically, this is the start right here. Can you guys see my mouse as I move it? I'm not actually sure.
Yes, we can see your mouse.
Okay, thank you.
But everything else is pretty small.
Maybe if you double click to like remove my... So yeah, top of the funnel is basically, you start with building a list, right? So you have a list builder. Typically, we always have a list builder, a separate BDR, and a separate, we call this a VC, valuation consultant, right? But it's kind of like the AE, the account executive, right? So this would be the top of the funnel, building lists, getting appointments, collecting financials, building deal summaries. I would call this like the top of the funnel. And this is what we were good at the first time we did it. And then the bottom of the funnel would be this side, which is, actually creating the valuation, setting the expectations, reviewing the deal, reviewing all of the calculators, adjusting the offers, and going back and forth. So the first time around, we did this really well. And then we kind of had to learn to do sort of this bottom part better.
If I may add, in the traditional sense, many of you guys might be familiar with this. We usually talk about funnels in terms of sales and lead generation. So you want to make an effort to go wide to the market. And it's a diagram literally of an old-fashioned funnel. You have a wider mouth at the top. You're catching a lot of opportunity, but they're not necessarily qualified or warmed up or mature to get to the goal line. So there's kind of a stair-step process to get them better qualified, better ready to convert as an actual closed deal. So that logic does apply here on the off market. You're, as the old saying goes, you might be out there, you'll kiss a lot of frogs and you'll get to know them and work with them, but eventually some start to emerge as real viable opportunities. And the longer you work it, the further down into the detail you go, past the sim into negotiation and into LOI.
Yeah, so I figured most of the questions will be around this sort of process. So I'm going to leave this open when I do questions. I was just going to take one last look sort of at the top of the funnel, actually, which is expectations around call center stats. And we can, again, talk about anything you guys want to talk about in any piece of this. But basically, a list builder makes a list. There's lots of different ways you can do that. The one we do most now is a Google Maps scraper plus a lot of manual contact info research. You can Google license holder lists. Most states will actually publish a list of all the master license holders, like a master plumber license holder in New York. Just Google it, you'll get it. I know someone was telling me that they just looked at the list and then showed up at someone's home and is looking at a deal now. Was knocked on their door. And then there's paid lists through Zoom Info, there's paid lists through Data Axle, a bunch of different places you can look for it. It's a little bit more expensive, but then you save, the work of hiring a VA to do the list building. So list builders build a list, BDRs call people. Our BDRs in the Philippines now, you have to go through a bunch of people, but once you find someone good in the Philippines, they're as good as someone onshore, and they don't churn nearly as badly, and it's it's cheaper, but they earn a good salary. So our standard is 90 people a day. Some people do a bit more. We find that about 2 to 3% turn into scheduled calls for the onshore valuation consultant. So typically they're in North America. They're the ones that hold the calls with the sellers. We've found that about 25% are good fits. Good fits for us means they match our STE expectations. They're over 5 years old. They have over 10 employees. They want to actually sell, and they want to sell soon. At that point, we proceed to collect financials. Whoever put their hand up.
Yeah, this is Nick. When maybe you're operating at a higher level, the issue I have is that I do want to outsource a lot of the calling, but then I feel like maybe these are smaller companies that I'm more likely as the potential buyer to get a response than someone who's outsourced or so, like, quote unquote, part of the team. How are you seeing any reaction to that, where you might have lost it if there wasn't maybe more of a personal or caring connection?
I mean, you likely
or is
are.
it just straight business?
I mean, you likely are if you're the ultimate buyer. And the reality is, if you're the ultimate buyer and you're making that initial call, you're likely to have that. You don't have to set up the appointment for somebody else. You can just immediately talk to the seller, right? So yeah, I'd say if you're looking at this as less of a numbers game and you think, hey, my target really, I only have several hundred businesses I can call, then yeah, I would do it yourself and understand that it's worth the extra effort because you just have a small list. That being said, most of the people that we work with, our benchmark's 2,500 targets per LOI. We might be looking at needing a couple LOIs per deal, right? Or estimating we might need 2. So that's 5,000 targets. I'd say most of the people we work with, their thesis might be able to cover 15 to 20,000. So I think the first step is actually just looking at the list. Yeah, so that's sort of an outline of how we do it. I figured there would be a bunch of questions that I could just leave this up. These are all processes essentially. The yellow ones are very important ones. These here are swim lanes, so they're effectively 6 different people involved in a search. When we do a search, there's a list builder, a BDR, a valuation consultant, a deal analyst. All of those are, those 3 are offshore. These 3 are onshore in North America. So that's the valuation consultant, the customer success person, which is a little bit more sort of like Accelerator Plus oriented. And then our executive community, which is, typically it's kind of like the investment committee, but a little bit higher level. So anyone have any questions about any step or about the actual structure or philosophy around off market? Go for it.
Hey, Hayden, it's Paul. One of the things.
Paul, we lost you. I don't know if you.
Hey, can you hear me? Can you hear me now?
There we go.
Yeah, I got you, Paul.
Hey, sorry about that. Hey, I've been doing off-market search for several months, and one of the things I've run into is just it's hard to tell, kind of going in, what's going to be the lie of the ball in terms of how the business has, handled their taxes and their P&L, and how do those tick and tie, and that's obviously a ton of work to just kind of dig into each one of those. Are there any sort of kind of guideposts, guardrails, things that y'all do up front to try to head off what you think could be problem sellers that are just completely out of order? Or do you kind of dig in once you've gotten to a good point, you just go ahead and dig in and start going through the financials in detail yourselves?
Yeah, I mean, we definitely want to see the tax returns. And so there is this piece here, if you can see my mouse, around the actual off-market review and data room with Alan, so from First Internet. So we have to get the tax returns that's included in the financials, and we will send that off to Alan to make sure a deal's sort of financeable and get an extra pair of eyes, and he'll be willing to do that for you too. And that can help. And so he's kind of our extra layer of defense there.
Got it.
That being said, like, it really needs to be approached like a numbers game, to the point where you're not even thinking about one deal at this point. You're just thinking about I need to be getting, if I have one full-time BDR, they need to be getting me multiple people a week to this point, right?
Yeah. Yeah, that's helpful because certainly my first scan is taking a look at the tax returns, just trying to eyeball. Obviously, cash and accruals can matter, but usually that's a good first pass. That in and of itself can take a lot of time, but yeah, I mean that's part of the fun of the off-market search.
Yeah, and tax returns are, I mean, a lot of these guys use their businesses as a nice tax shield, so it's just as bad on market, really.
Cool. Thank you.
Yep. Go ahead, Nick.
Hey, again, I'm on a smaller scale. I'm looking for telecom, low voltage installers in Seattle. My biggest thing is I need to go buy lists. It's been hard to go find. So I'm looking at Zoom Info and a few of those and dealing with all their salespeople. I saw you mentioned Zoom Info there. If I was really looking for a list sorted by revenue and then the leads and the contact information for that person, it looks like it's $1,000 a month for Zoom Info. Is it worth it to go pay for? Is $1,000 even pretty cheap for that type of list? Do you think Zoom Info is just the one that will do the trick?
It depends. Like, Zoom Info is much better at corporate, B2B. I would say, so my experience personally with Zoom Info is a couple of years old. When I was doing this mainly for Snowball, we did pay for it. It wasn't great for HVAC and plumbing back in 2021. I'll tell you that. I'd look into Data Axle, which used to be called Info USA. We used them quite a bit for a while, and they were a lot cheaper. It worked out to being kind of similar to the price that we do of just scraping a list. And then, I would look into, using Google Maps scrapers. Especially, it sounds like you have a pretty specific target. You may need to actually get as close to 100% of the businesses that exist out there. And probably a Google Maps scraper is the only way to do that for you.
Yeah, I've gotten the names. It just then comes down to whether they've got 4 million revenue. Trying to get that number is the tricky part.
Yeah, that's difficult. And my advice there is just call them all.
Yeah.
All
right, you won't block me. Thanks, Aiden.
Hayden, any thoughts on turning to some of the freelancer service platforms like Upworks or well, less so Fiverr, but any thoughts on experience finding specialists who maybe represent themselves as good at doing this BDR type calling and scraping to help sort of jumpstart the process?
Yeah, 100%. I mean, there's also just tons of these sort of recruiting agencies for offshore people that you can work with as well. I'd say, yeah, so again, I just highlighted this because it might be helpful, but basically if you imagine yourself on this sort of flow chart, you're probably basically everyone who's under the VC customer success role, and I would say everything else probably should be sent out, and then that's more of just creating a simple process and sending it to people and testing it. I'm old school, so I always used to just I always work with hiring people directly and just giving them a test task and paying them for the test task. And so, whether that's a list builder or whether it's a cold caller, I'll typically, if there are 10 people I'm looking at for a role, I'll assign the test task. Out of the 10, maybe 5 will do them. Out of those 5, I might choose 2 to 3 and stick with 1 to 2.
Yeah. Well, I bring that up because that's exactly the point and experience I've had in the past working with client companies. As an example of you guys just planting a seed, I've done some work with home building companies, and they always have a challenge on resources to do takeoff and bid sheets on their work. And we found great success going to some of these alternate sites. And to Hayden's point, give the guys a test, give them one set of blueprints, and give the same set to all 3 or 5 of your candidates. Let them create the work that you want. You evaluate it, you check it, the ones you like, you give them a second opportunity. All the others, you say, thank you very much, not interested, move on. And it really becomes an efficient way to identify some skill sets that you might not otherwise have the time to train up or develop in somebody that is just, basically good at, say, maybe making a phone call or building a list, but it gets real specific to the task.
Well, you guys have the hard part already learned, right? Which is, how do you actually, due diligence on the deals, and how do you deal with the sellers, right? Honestly, that's the hard part. Everything else it's just hours, right? But it doesn't have to be your hour, and it shouldn't be your hour. Realistically, your list builder, if you go through either, let's say, a data axle, or like Doug mentioned, if you go to Fiverr and have them scrape the list for you, those definitely exist, and you can just pay per listing or pay per 1,000. You should be able to get, for $1,000, you should be able to get enough of a list to work with. And by enough of a list, I mean like 5,000 plus records with contact info filtered. And then, your BDR, again, that's probably someone earning about $6 to $7 an hour offshore. And they will get through that list. They'll call probably like 400 to 500 businesses a week. So you can kind of budget that accordingly. People can also work together if they want. I mean, I think that's an interesting idea. If you have a cohort of AEs and you want to kind of get together and share the cost, that's something that you can look at. And then, yeah, in terms of setting up the calculator, and that all exists already in the training, right? You could teach a VA to do that. Give them access to the training.
Any other questions, folks?
Any questions on timeline? Talk about that a bit.
Okay, what do you think is a reasonable timeline?
I'll go through it in order. So I would say that the piece that's highly variable is collecting the financials. So within getting a list and getting your first call, that should be a week or two max. Again, this has really got to be a numbers game. I look at it as probably you probably want to, in your first 2 weeks, you probably want to have contacted, let's call it close to 1,000 businesses, and probably had set up at least 20 to 30 calls. Of those, I'd say financials collected take anywhere between 2 weeks and 6 weeks, really depending on the motivation of the seller and how organized they are. And so there's an element there of follow-up that definitely needs to happen. From there, you should be able to analyze and ask questions, within a week or two. And realistically, you could be able to get an offer out, easily within a month of collecting the financials. However, I don't actually encourage that. In most cases, there's not really a rush here, and you can establish more of a relationship pre-LOI if you want to. And so I think one of the things that we learned is when we first started, we really kind of rushed to LOI because that's what we were used to with on market. But with off market, we're a little bit more patient and try to develop the relationship more.
Should you tell? Sorry about that. Should you tell the seller that you're looking at other deals if they ask you?
Yeah, I don't see any issue with that.
Okay.
Yeah.
And you mentioned like to set up calculators. I think we do have calculators, but I don't know if we have one that sort of goes through like the initial stages, because brokers typically give you like a summary already. And so from the summary, then you put it in the calculators, but there's not, in this case it's a little bit different because I'm on the stage right now where I'm starting to pick up on talking to sellers that weren't interested in selling, but just after talking to me, they're entertaining the idea, but they're sending me stuff in PDF format, and so I have to sort of convert it into to Excel, and which is a lot of work, and which already, like you mentioned, the broker already does. But do you have maybe like a easier way to sort of gather all the information to make a quick decision?
So
or you're saying just to train someone?
yeah, so I would say two things: train someone and use AI, and ideally train someone who uses AI would be the best of both worlds. So for a lot of stuff, like they send you PDFs and you need to convert them to Excel, you can use Gemini and stuff to do that, a lot of that for you. I would say just train someone though, and hire someone who's decent with Google Sheets, and you could hire someone who's got a accounting background in Mexico for $1,000 a month, and they can do this stuff for you. There's no reason for you to spend your time doing it.
Okay. Is 1,000? I did speak with someone last week about potentially, hiring them for that specific, exact scenario. Would you say 1,000 is the average, typically for something like this?
Yeah. So if you're hiring in Mexico, Argentina, the Philippines, I'd say, and you want someone who knows like basic accounting, I'd say 1,000 a month, full time, is if you're paying them directly, is a good wage.
Okay.
And their English doesn't have to be 100%, right? If they're not dealing with customers. This is a different profile than the BDR who has to have a perfect accent, right? If you're hiring someone in, Eastern Europe, or, non-Ontario, BC, Canada, then it'll be a bit higher. Eastern Europe might be like 1,200 to 1,500 a month. And then, parts of Canada, you might be able to do like 1,800 to $2,000. And at that point, you could probably hire someone in Utah or something as well.
Okay. Thank you.
Yep. Yeah, if you guys are really interested in off market, like I would say the one thing you should take from this is look into just hiring a VA, and training them. It'll be worth it.
Yeah, I concur. I hired a VA 3 months ago, and I'm just now picking up, on talking to sellers, then talking to like maybe 4 to 5 sellers. Sorry, 4 to 5 sellers a week. So
Yeah, that's good. And to me, like, I think the one piece of value I can offer is giving everyone a bit of a standard, right? So like if you do hire a BDR, what's the standard in terms of, if they're offshore, what's the standard in terms of calls made, connect rate, etc. And yeah, if you have one BDR and you're taking 5 to 6 seller calls a week, that's pretty good. It's not bad.
Hayden, for those of us who don't know, what exactly do you mean by a VA?
A virtual assistant.
Well, I know that, but doing what?
Doing the things that are in the swim lanes under list builder, BDR, and deal analyst.
Okay, so it's a catch-all for all of those.
Yeah, so I would say in actual fact, the deal analyst is a different profile than the BDR, which is a different profile than the list builder. The list builder doesn't necessarily have to be a full-time hire. That's probably, like Doug mentioned, you could buy the list, or you could contract the list from a Fiverr. But the BDR is definitely a different profile.
Basically, in today's world, there's just a incredible range of opportunity to hire these virtual assistants who can be very specialized in the tasks they perform, and it's a matter of perhaps finding an agency that helps place those. I can put a name in the Slack channel when we get offline here, somebody I'm familiar with that has a more of a formalized certification program for the talent they bring. So you're not just kind of taking a crapshoot on finding a name on the internet, but there's all varying degrees. But the point is, there are a lot of the freelance marketplaces where these people live, and they are all, the other word for it is gig-based economy. They look for small gigs to pay their bills, and they're not looking for full-time jobs. So you can hire for, 5 hours a week, 10 hours a month, 20 hours a month, etc. And you can allocate the tasks that you want them to perform. So there's a wide spectrum of opportunity out there when we talk about the VA world.
Dante, your hand was up?
Yeah.
Yeah, I was just wondering if there are any industries that are exempt from any of these steps in the process, or if this kind of works for everyone.
That's a good question. So I would say, this particular pipeline is set up for brick and mortar businesses where the owners, where there's a gatekeeper who will answer the phone. and part of one of the most important scripts is sort of that BDR script to get past the gatekeeper. So when we did digital, we skipped all of the calling and did pure email. And then that's more about, okay, how do you email at mass? And that's even more of a numbers game. It's much easier to do, and it's much easier to set up that first call. So yeah, to answer your question, I would say if it's a younger demographic that checks their email, you might want to skip this and go just pure email. And then you're sending email at scale, which means you're using like a tool like SendGrid. And you're using a tool like Scrapebox to really scrape effectively.
Thank you.
All right. Any other questions? Not seeing any in the chat room. Anybody got a hand raise? Well, Hayden, we might have covered it. I think you got it.
Great. Anyone have any questions about anything else non-off-market search related? I've got 15 minutes.
I guess I just have a question about, would you cultivate individual brokers to ask them to get you deals?
Yeah, 100%. I mean, that's got nothing to do with the off-market side, but 100%. You should, every deal you talk to a broker on, you should, talk to them and explain to them what you're looking for. There's been multiple points where a deal got done because an AE had a really good relationship with a broker.
Okay, so that's a useful thing to do, to cultivate them.
Yeah, I mean, Daniel's deal, he got it because, when he went out for lunch and took the broker out to lunch, ultimately his LOI didn't get accepted, but when the LOI fell through, the broker called Daniel first, and Daniel got the LOI signed like 2 days later. So yeah, I think he was looking at the deal in June. The seller went with another buyer. The other buyer kind of fell out of the deal in like September or something. And the broker contacted him, and then the new LOI was signed 2 days later at the same terms as the original LOI, even though in those 4 months or whatever it was, the business had actually increased quite a bit. Its profitability.
Thank you.
Yeah, I got one more actually, Hayden, if you got a second.
Hey, Tom.
Hey, so yeah, obviously we haven't connected, but we ended up walking away because the working capital spiraled out of control. But anyway, so back in the pool with the Acquire Plus, sort of where do we, for those of us doing the Plus program, like fit in with this in terms of setting up the search in our area, all that good stuff?
Yep. So our team is working on the list now. I've already talked to Mick, but basically, kind of back at the start, going to be building the lists, contacting them, calling and setting appointments. Obviously, Ale and her team will still do the on market. Off market's a different team, but that'll be the main focus on your end because you're kind of New York constrained.
Yeah, is that's Mick who's running with that? I don't think I've connected with him yet.
Mick runs that team. I mean, that team is about a dozen people. So
okay,
yeah.
If I wanted to talk to someone on that team, would he be they be the best person?
Probably best to still go through Alok.
Okay.
Yeah, Alok kind of runs that division.
Perfect.
Yeah.
Okay.
The key thing to think about, Tom, if I may interject, and this is food for thought for anybody else that might be in or contemplating joining the Accelerator Plus. When we kick off that, or you have a deal fall through and basically got to go back to the start, it's always important to really start with looking at your investment thesis and be sure that it's still accurately painting the landscape of where you want to go and what you want to do, because it's the investment thesis that defines the targets that the deal desk mixed team is going to go after. So they don't read minds. So you need to be able to articulate where you really want to go and what you've learned about, particularly if you're now coming around for a second round and maybe you learned something, maybe it's adjusted your thinking, and maybe you want to eliminate union-based electrical contractors in the future.
Well, I'd say, well, I mean, just on that. So I think we still like the union-based electrical contractors, but just
I'm kidding,
just,
of course.
no, but just without conceding on all working capital in the LOI.
Yeah.
It's hard because when it goes from 700 to 1.5 during the process, it changes the multiple a little bit.
Yeah, for sure, sure.
It was a couple of things in your case.
Yeah,
exactly. Well, that's a great question. That's what these dotted lines of no's are, right? Is, hey, if the A is not interested, or if it falls through for any reason, it has to come back to sort of this investment thesis amendment.
Yeah,
because that affects what the list builder puts together. And
totally. Thanks, guys.
Okay, well, in the silence here, I think that may be a good time to bid adieu and take an exit. Hayden, thanks for everything. Appreciate
I do have
the
a
input.
question real quick, Hayden.
Oh, there we go. There we go. All right, Mark.
Go. A little bit off. Nice to meet you, Doug, too. What industries right now that you guys are seeing are fragmented?
most industries are fragmented. It's probably the opposite question is probably easier to answer. What industries are consolidated?
Okay.
I mean, there's like levels of consolidation, right? And
Right.
so I would say everything we're looking at is very early in the consolidation phases. I'd say HVAC is slightly more advanced. Things like dental clinics and medical spas and all that stuff is like significantly more advanced. But in the home services space, I'd say everything's fragmented. HVAC's a few years ahead of plumbing, which is a few years ahead of roofing. The roofing seems to be picking up.
Okay. Thanks a lot, brothers. Appreciate it.
No problem.
Okay. In the one layer I'll add to that, we don't have a lot of you guys looking in this space, but we're certainly willing to support and help, and that is just manufacturing of different types. Again, to Hayden's point, there's levels of sophistication, but I think generally there is some more consolidation going on in manufacturing than kind of the wild open effect you see in a lot of the home service businesses.
Okay. Thanks a lot. I was looking at actually manufacturing plants myself. I have a partner that has a manufacturing plant that I was thinking about joining. It's been in business for about 50 years. So
my observation would be if you can find one that is still independent and make it work as a proposition and then hold it for 2 to 3 years, you could be a consolidation target, and that'll be your big payday for doing it.
okay. Thanks a lot, Doug. Really appreciate that.
Yeah.
Thanks for the wisdom. Thanks, Hayden.
Another question. So, for like the technical piece, like creating like a valuation, based on the, just the technical setting up calculator, creating valuation. Is there someone from the team like we can reach out to if we have like specific questions, or maybe like reviewing it just to make sure like we're doing it correctly, at least for the first couple of times, things like that.
So most of those tools are included in the training. And so if there's any questions you have about the training, then I'd say you can ask it in that Thinkific training in Slack, and Penelope will get back to you. Like there's not that much difference in what you do off market versus on market. Like you mentioned, it's more about like, okay, what's normally included in a sim that I need to, ask for in my first conversation with the seller. And that's just a list of questions. How old is the business? What's the SDE? How many employees?
These
customer concentration, seasonality, that type of thing.
Mm-hmm, mm-hmm.
Cool. thanks everyone. Have a great weekend.
All right, everybody. We will post in Slack when this gets published and the show is dropped, and look forward to seeing everyone next time.
Thank you.